Hey everyone, welcome back to Upside Down Data. Today I want to talk about Link and whether or not it might be able to join in on this rally we're seeing in the crypto space. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there. So Link is an interesting asset, I think, because in a lot of ways, I think it's one of the most universally considered or universally recognized in its fundamental value. I think a lot of people realize that Link has dominance in the Oracle space. Web3 in general needs protocols that can bring outside information into protocols, and therefore Link makes a lot of sense. That kind of Link is very much integrated into the market, and so if the market as a whole, if Web3 as a whole succeeds, then Link should do quite well. What I think a lot of people have been disappointed with Link is that despite this kind of widely recognized fundamental value, it really hasn't performed all that well ever since, the end of the bull market going into May of 21. I mean, Link was one of these assets that wasn't able to put in a new all-time high in the fall and going into winter of 21, whereas a lot of other assets were able to put in a new all-time high here above what happened over there. And really with Link, in general, it's been, arguably more or less just kind of in a downtrend ever since this all-time high back here in May of 21, and it's down currently about 86% from that high. So I think that's a lot of Link people kind of unhappy. But the thing about Link is that, it's kind of an interesting asset in a lot of ways if you zoom out. So that's kind of focusing on the negatives, the more recent price action. If you look at the way that Link has performed leading up to that point, it's actually a very different story that we can see. Link has had these big runs. It really joined in the July 19 rally where a lot of other crypto assets didn't do that. And then it actually was just more or less flat from there through the March 2020 crash, which is notable because a lot of other assets in the crypto space that started at around the time when Link started, back in late 17, early 18, a lot of them actually had their all-time lows on the March 2020 crash. Link actually was still substantially up, actually above its peak from the 2018 or 2017 into early 2018 bull market, which is rare. Few assets did that. Then it had really nice explosive moves to the upside going into the summer of 2020, really one of the strongest performing assets at that time. And so really this downward action here is kind of the first time that Link has shown kind of a full-on bearish trend. Really, arguably, it was just kind of in a bull market its entire history up until this inflection point. And so in some ways, when you zoom out, this looks like it just might be Link's first bear market, which is relatively normal for a crypto asset. And so in some ways, I think there's been a lot of pain more recently people have been experiencing, but it's not totally unexpected, I think, for an asset like Link to have, its first kind of bearish thing. And the other thing about Link as well is it's not an asset that really feeds on hype quite as strongly as some other assets. And so that might be another reason why, going into this, where I think a lot of the assets that did run had a lot of hype building into them, a lot of the alt L1s, Link didn't join in. But as I mentioned at the offset, what I want to really focus on this video is what might happen now with Link. Link, as I mentioned, has been in this kind of overall just downtrend leading to this point. Even considering these moves here, you can kind of consider these ultimately to be more or less part of the same general downward move. Might we at least see some kind of relief at this point here? Link so far has not really joined that strongly into the current rally. Currently we're up about 27, a little less than 27%. So not bad, but certainly not like we've seen some other assets explode. Matic, Polygon, for example, up, well over 100%. Quant Network up well over 100%, etc. Link has not shown that yet. But might it be kind of a later entrant? If this rally continues, could Link have some room to move to the upside if we see a continuation of this rally? That's what I want to focus on here. So to start us off, I'm going to put up some of our models that we have here on the channel that give us some indications. So I'm going to start off by talking about the medium term UDPI, upside downside potential indicator. If you're not familiar, this is our risk model we have here on the channel. So high values in this case. So this is the Link price history here, color coded to the risk level at the time. So high levels, up getting into the red is high risk. Low levels, getting down into the green is low risk. And you see it does a good job of identifying these peak points and these low points, these distribution times where it's been favorable to be distributing Link, as well as these accumulation times it's been good to be buying Link, etc. And we've really just been in a sea of green, probably unexpected, in this kind of lower range that we were in, even in that spike up that we had seen a little bit earlier on, kind of in this general down level here. And we can see this a little bit more closely if we just zoom in and look at the raw level of the UDPI across time, and then the yellow here is the link price. Now, I should note this is the medium-term UDPI, so this is reactive to moves that play out over weeks to months. So the reason I'm focusing on this is that I think the medium-term and the short-term tell us a little bit more about the sustainability of a more short-term potential rally that Link could see here more than the long-term. So that's why I'm trying to focus on this. And so you can see is that we've really, we came down to this lowest kind of level, down below -4, which we've only seen once before, back here in 2019, although we bounced off that level back a little bit earlier, late 2018. And so we really started consolidating down there, really ever since really the market ended up kind of capitulating down, and Link has just been trying to form some kind of a bottoming structure down over here. And we started to chart a course back to the upside with some of this more recent upside that we've started to see. Now, I think what's going to be interesting to see is how far this could go. If we look back at history of previous times we've exited these kind of risk levels down here and started moving back up, what we can see is that generally speaking in the past, -1 has more or less acted as the end point for a lot of those runs, the run we saw here, and then some of the run we saw here before having to consolidate more. And so, that would be one level I'd be watching, is that, if the rally continues, if Bitcoin stays healthy, and if, we don't see the stock market start to roll over or some of those things, then I think, targeting a level like that, I think could be quite plausible. And that's where I'd be looking at as a logical place to end should Link decide to join in, and should the rally end up continuing, I'd be watching that level. Doesn't mean we have to get there, right? This very well, my base case is that this is just a bear market rally, and that Bitcoin will eventually have to go down, test some lower levels, hopefully put in a higher low, but potentially not. And so, it's really just a question of how long that lasts. But if the market gives Link room, I think this would be a logical place for it to start to go. Of course, not financial advice. You form your own opinions. That's just what I'm looking at here. And if we look at the short-term UDPI for Links, this is reactive to moves that play out over days to weeks, so even shorter in its time preference. We see the same general story of what's going on in the kind of broader picture. And again, we're moving up, and in the past, again, moving out of these low risk levels, -1 has oftentimes acted as that kind of upper level in these kind of points in Link's past. And so again, I'd be watching -1. And we actually did that again on the short-term UDPI just here in this little spike that we had, this kind of fake rally here that Link had before getting rejected down. Sure enough, it was just above -1 that we ended up getting rejected. So I think watching the -1 level again, if we continue to rally out of here, would be very reasonable. But again, nothing says we have to do that. We certainly could go down and realize some of this downside. But that's what I'm watching there. So from a risk perspective, at least in the shorter and medium term, there's certainly room to move. We're not yet at these places that have acted as resistance in the past yet. So I think there is definitely room that's reasonable for Link to run. But it's just a matter of, is the market going to stay healthy enough to allow that? That's kind of the big question that is outstanding. Now, another way that we can look at Link and what's going on right now is to look at the trend, or look at some of our trend model we have here at the channel, our market direction classifier, or MDC. So if you're not familiar with this model, the way it works is it assesses the price action of an asset and it creates a critical level that it's watching. And basically the idea is that the asset is above the critical level, that's bullish. Below it, that's bearish. And generally speaking, you'll see when you break above, especially decisively above the critical level, there's some more upside that will follow. And when you break below, more downside will follow. So it's a way of just assessing the general health of the asset. If it's spending a lot more time in the green than the red, that's generally an uptrend that leads to a lot more upside. Break down below, oftentimes a lot more downside will follow. And you see here, generally speaking, this has just been a red time ever since, late 22. And except for some small kind of peaks above it, generally speaking, we've been down below. And now we're starting to now flirt more with this critical level. And you can note that we actually just closed above it. Now, the reason I like the MDC versus some other indicators people look at to look at trend is that I kind of view the MDC as doing a pretty good job of helping you manage risk. So the idea is that even if the MDC does get faked out, like for example here, we got this kind of flip to the upside then down, you'll see the MDC level is actually flat or a little bit up through this whole time. So even if you had, for example, bought here when it flipped green and then sold here the second it flipped red, you really didn't lose money in that trade. and you protected yourself from all this downside. Whereas with some other indicators, they might not have, oftentimes what they'll do is they'll tell you, oh, get in, and then this level would actually been all the way down here to get you out, and you would end up losing money. That's what I like about the MDC, is it's a nice way of kind of managing risk if you're looking for kind of a trend model to be trading with. Now, again, I'm not saying you should use the MDC to trade, but if one does, that's one of the advantages to it. I think we can see that clearly also if you look at how it compares to something like the 20-week moving average, which is this purple line I've overlaid here as well. Where oftentimes with the 20-week, it might get you out, like here, for example, in this fall off, a little bit later than the MDC, but it would have gotten you out. But it would have also had you sitting on the sidelines for this entire run up that we saw. It wasn't going to all-time highs, but we still did see decent appreciation on the link throughout this time. The MDC would have gotten you in fairly early and had you riding a lot of that move and then gotten you out up here. The 20-week would have just had you getting in, here, and then actually getting out all the way down here. You would have actually lost money overall trading on the 20-week. You would have been gaining money overall trading on the MDC. So that's why I personally like looking at the MDC more than something like the 20-week moving average to determine if something's bearish or bullish, because the MDC lets you capitalize on moves a lot more efficiently than something like the 20-week. So that's just why I like to look at it. So if we zoom in more recently, just to talk about what's been happening, as I mentioned, Link has been kind of flirting with the MDC critical level for a bit. It's been kind of getting rejected off of it down here, except for this kind of fake out that we had here, where the MDC was kind of, overall ended up being more or less flat through that. But now we've come up and we've closed a couple of days above. And so, if the market stays healthy and the market continues to rally, this is kind of a sign that you'd like to see. You'd like to see Link start to show some strength, closing above the critical level, be able to maybe put some more upside up. So the model's currently looking at $6.5 as being kind of that critical level currently. Although this is a dynamic level, it will continue to change. So, Link now trading up over $7 currently. It is above that level notably. So we'd like to hold this level to be able to kind of have the model see it as more upside being reasonable. If we lose it, then oftentimes what you'll see is that when you lose the MDC critical level, more downside will follow. Or if you lose it, you don't immediately get back above it, for example. So that's what we like to see, is stay above it, or if we do fall below it, get immediately back above it again. Otherwise, it might just mean that more downside for Link is in the offing. So that's kind of, from the model's perspective, the summary that I could give there is basically that there is room for Link to run. There's certainly more room for it to go. The risk models are saying that, more upside is certainly plausible. And the MDC is saying that currently it has a bullish bias on Link, that it thinks that it's more reasonable to be bullish on Link right now than bearish given its price action. But there's some other things we can also look at of where Link might go if it starts to run. And one that I like to look at a lot is just to look at the volume profile for Link in kind of the recent past. And so if we just kind of zoom out to capture some of the more recent history for Link, we can see that, currently we're at this level of a lot of transactions. So, there's a lot of volume right now that's been transacting back here. But also if you go back to some point in Link's past, there was some volume that was being transacted. But really from here, this kind of big spike in volume, because I'm only showing you from, July of 21, this is all from here. So there's been a lot of Link transaction that's been happening, right in this general area. So a lot of people have been selling, capitulating out of Link. A lot of people have been buying, building their cost basis in Link. So that's what we're seeing here. And so if we break out of this level, right, if we break out here, you can see that not a whole lot of volume in kind of the recent history has been transacted between here. Really, we fell through these price levels so quickly, there's just not a lot of volume that transacted back over here. And so what that can mean sometimes that if we do break above it decisively and the rest of the market is bullish, then the next kind of level of resistance we might be looking for is actually closer to the $13, $14 level, kind of back up here, where there might be another kind of wave of people who have their cost bases here who be looking to exit at break even. And so this is where I see it kind of being a critical zone for Link, that if it can continue to chart, of course, the upside break out of this accumulation zone that's been happening ever since May, really, then you'd be looking at some of these upside targets that might be more plausible. So we haven't gotten there yet. We'll have to see, what happens. But certainly that's a level that I think is quite realistic. Now, if we get rejected and move back down, we'd like to see kind of this level hold, because, one of the things that's notable with Link is that we came down to about $5.30 in the capitulation that was prompted by the Terra Luna collapse. We actually retested that same level on the capitulation from the Three Arrows Capital and Celsius kind of collapses. It's notable we didn't set in a new low there. And so what we'd like to see is that if more downside comes in the crypto market, if Link can hold this as support again, that would again be, I think, a sign that Link would actually be outperforming a lot of other assets. A lot of other assets, put in a low here, then a new low down here in middle of June. But if Link can just continue consolidating in this range, that actually would be a sign of strength, a sign of relative outperformance, even if the side of the price action is actually flat. So that's just another thing to look at. That if we don't get a rally with Link, I would be watching this level very closely if we can hold it again. That might suggest that Link is starting to outperform, which then makes it a very potentially appealing asset relative to the rest of the crypto space. So overall, my kind of outlook on Link is that I think it has room to move now if it wants to. I think we have to maybe see a little bit more to be more confident of it being able to really rip to the upside. But, it certainly has room to move if it wants to. And again, if we don't, I still think there might be a reason to be optimistic if it can start holding some of these lower levels of support, especially if the rest of the market starts setting in new lows. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter for a lot of updates, better indicators, and more over there.